Hello traders, Gary Wagner here just after 1 o'clock in Honolulu, 6 o'clock in New York. It is Wednesday, November 25th, 2020, and this is the Daily Report for Gold and Silver, a early weekend review in honor of Thanksgiving holiday beginning tomorrow. Quiet action in gold and silver today. Muted action really across the board as traders prepare for an extended holiday. But on today's show, I want to take a look at the potential, and I underscore the word potential, that we could find support at the 200-day moving average, and if it doesn't, where we can expect it to go. But first, to current pricing. Traders, it is the day before Thanksgiving, of course, in the United States. A holiday of giving thanks will commence tomorrow. Markets will be open, but only for a half a day on Friday. Therefore, this is going to serve as our weekend review. We'll come back to you on Monday unless something dramatic happens on Friday, and we have seen that before. Gold currently trading down 70 cents. At 1804, down 60 cents now. When we look at spot, that is trading at 1805.44. Silver's actually posting a gain on the day of about 0.3%, almost 8 cents, 23.37. And the dollar index has definitely aided precious metals because that is down by a little over 0.25%. And it is at a critical point in terms of a Fibonacci level. If we see it break that, we could see a substantially lower dollar. Let's take a look at our technical studies. Although there is a half a trading day on Friday, in essence, the week is pretty much closed out. We are looking at a weekly candlestick chart, this of December gold. We can absolutely see that this week created some real chart damage as it broke below a key level of support. That level of support comes in at around 1845. It is also the 38.2% Fibonacci retracement. Very noteworthy to me is the fact that you get these series of lows right in here that really show that particular area's support. Also, when we look at this market breaking out to the upside, you can see that the big candle occurred after breaking above that. So that tells me there was momentum building, there was resistance there, and that's what propelled it higher. So it does appear as though that is major chart damage. Just looking at this chart, the next area we would want to look at would be 1767. However, when we look at a daily chart, it tells us a completely different story. We are looking at a close-up of the activity that occurred since August the 10th when it hit this new record high and the subsequent sell-off that followed. The sell-off was pretty harsh considering we went from 88 down to 1804, just shy of a $300 drop. What is interesting is that yesterday's activity definitely took us to the 200-day moving average. Of course, we talked about this cross that occurred on the 16th. We can see that they are widening, which means that the actual buildup of strength to the downside continues to be strong. And today, the low also matched this 200-day moving average. Now, that doesn't mean that this is going to be a place that finds absolute support, but it's a very logical place to look to see if we get some kind of a pivot. What do I mean by that? Well, we could see a three-river morning star, a piercing line, and engulfing bullish. There's a multitude of key reversal candlestick patterns that, when found within the confines of other indicators, tend to have more strength. So my sense is obviously we're going to go into this extended weekend flat, but we really want to focus on this low here because if it does break the low, the next real area has got to be the 50% retracement. I am putting different candlestick patterns on the screen that would indicate a potential pivot or key reversal. They are all multi-day candlestick patterns and all fairly common patterns. But these are the types of patterns that we would want to look for that would verify that, in fact, we could be looking at a potential bottom in the marketplace. The key, of course, is being able to hold on to the critical level of the 200-day moving average. And traders, we are looking at a daily chart of silver futures, And there are quite some distinctions between our observations in gold compared to our observations in silver. First of all, we are far, far above the 200-day moving average. In fact, it seems to have found tentative support, even if it's short term, at the 38% retracement, which is roughly at $23. That's where we're pegging our first level of support, with major support at 2079 as well as 2059, that area. The last chart we're going to look at on today's weekend review is the dollar. And the reason for that is I believe we are at a fairly critical level in terms of a fib retracement. That is something that I highly value in terms of giving us information. The 23% comes in at roughly 91.5. That is the low here. We have touched near that point, but we have not broken through there. If in fact the dollar does begin to sell off on a technical basis, there is minor support at 91, and that is based on this top here, with major support along this entire band, which comes in roughly at 90 on the dollar index. I want to wish all of our subscribers in the mainland a happy Thanksgiving. My wish to all of our subscribers that we have things to be thankful for, and in the light of a pandemic which has affected the world in such a harsh way, that things will get better and relatively soon. This has been Gary Wagner, wishing you as always good trading. Have a great holiday weekend. We will talk to you on Monday for the next daily update and review. Bye-bye.